up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today. Interesting, different, unique, innovative companies. Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna. The best trade idea resource out there.
What is up, ZingerNation? It is Thursday, or as my man Luke likes to call it, one day removed from hump day. Luke, how are we doing today?
What's up, producer AB? Happy Thursday!
Thursday! What's up, Zingers?
I hear myself in your mic, which is weird. No, I'm not Luke Jacobi, even though... Oh, I thought I had my name up there. I guess I don't. Spencer Israel. Luke Jacobi will be here in just a second. But he was like, Spencer, why don't you just fill in for me while I finish up this phone call? And I said, you got it, man. Anything for you. So here I am. Here's Aaron. Aaron, what's the plan for today?
So today we got a packed show like we do always. So first up, right here in a couple minutes, we're bringing the CEO of Platinum Metal Groups on, Michael Jones. Excited for that. After that, we got Justin Karen joining us from Blaze Capital at about 12:15, 12:10. And then later, Frank Curzio is joining us from Wall Street Unplugged.
Nice. Good day to have a metals guy on the show, because metals not having a good day, not having a good morning. So
a lot of these commodity markets are moving a lot, Spencer. I don't know if you saw what's been going on with lumber, with some metals. You know, it's interesting.
It's every commodity, it seems like, whether it's a metal or a soft agriculture, commodities are having a bit of a day. Not the kind of day you want. But we can talk about that.
Is there anything else you've been watching today or this morning, Spencer?
Yeah, what's going on with tech, man? It just can't stop, won't stop. The Nasdaq's at an all-time high. You look at, across the board in stock market land, you see Apple, Microsoft, Google, Facebook, Amazon, Tesla, all up. The Qs are ripping. What gives, man? What's the deal?
I think, Spencer, that people are less scared about inflation and rate hikes after yesterday's meeting.
I mean, wait, less scared about inflation?
Well, if after the meeting or during the meeting, SPY had a nice little spike up. People seem to be, if after yesterday's meeting, people were like super scared about rate hikes and stuff, I think these growth tech stocks would be getting hit hard.
Maybe
PayPal, Apple.
You're right. I don't get it, because on the one hand, they moved up the timeline for a rate hike. And so theoretically, on paper, that would be bad for tech, bad for growth. On the other hand, you're seeing how tech is reacting today, and so you would assume what Aaron is just saying, the two don't really make sense. So I don't know where that leaves. All I know is what the price action tells me, and that price action tells me tech is ripping today. So interest rates hikes, no interest rate hikes, inflation, temporarily or not, tech is ripping. And so I'm going to stick with that, as I'm going to let the chart lead my opinions more than interpretation of Jerome Powell yesterday, because the market is saying, I think, Aaron, exactly what you're saying. So that's
Spencer. Yeah. That's what I'm saying. Basically, is I'm going to look at what Mr. Market's doing, and so you have all these different people on Twitter, whatever, saying what stuff. But if SPY is going up during the meeting, then I think it's the market's taking the news good. Whatever Powell is saying.
Why is it Mr. Market? It should be like something that's more equal. Like why not Mrs. Market for once? I don't know.
This is one I was watching today, Spencer. Nvidia, one of my all-time favorite stocks, ticker NVDA, up 5%. That's a huge move for a company that big. I think all-time highs.
Yeah, all-time highs. I mean, it's all-time highs for Nvidia. You look across tech. Is there a tech stock that's down today? Maybe like one or two. I saw HP was down earlier. I don't know if it's still down. But that's the story of the day. The banks all called a bid yesterday after the Fed meeting. They're all in the red. Most sectors, I think, looking here, energy is down, banks, materials, industrials, down, healthcare, flat, looks like. Oh, Luke Jacobi, welcome to your own show, man.
And Rohan.
Luke, you're on your show. This is your show, man. I'm just here. Luke has no idea what he's on. Take Luke off. Okay.
All right, let's get back to the agenda,
Yeah,
Spencer.
let's get back. The show is off to a great start today. Look, can we bring on our guest?
Yes, sir. Bringing
Thank
on
God.
Michael Jones from Platinum Group Metals.
There
Hey
we go.
guys,
Hey,
Mr.
how's it
Jones,
going?
how we doing today?
just great. Mike is better than Mr. Jones, though.
All right, Mike.
All right,
Can you, first of all, where are you joining us from today?
Johannesburg, South Africa.
Wow,
Nice.
that's not Detroit.
No, it's a big city though. It's a happening place.
So real quick, first, can you just get our audience acquainted with the company a little bit? Tell us what you guys do. You know what the business model is.
Yeah, so we're a mining company first. We have a world-class asset in palladium, platinum, gold, and rhodium. We're located in South Africa, and it's something that we've been developing for a number of years. It's a huge deposit, 19 million ounces of those metals with a 45-year mine life. And that's one part of the business. And then we have a technology company that's actually developing technology to put those metals into a lithium battery. And we're partnered with Anglo American, which is one of the biggest mining groups in the world, on that technology. We're really excited about it.
Well, since you mentioned palladium, I feel obligated to say that palladium is down 10% today. I'm not going to ask you why that is, because I don't know if anyone knows that. But when you see data like today, where you get the gold down, silver, all the metals are down today, as we were talking about before. Does that change like your day at all, or not really?
Not really. I mean, we're in this for 45 years, right? And we've been studying the platinum and palladium market for 20 years. So our timeline is a little longer than a morning. I think this is a great opportunity for investors to have a look at these metals. I mean, they're strategic metals that you have to have in the stuff that everybody enjoys every day. So, sure, interest rates, you talked about it a little earlier in the show, people thinking about interest rates coming up and therefore precious metals come off because they don't pay any interest. So that's a common reason you see that drop. But I think it's a really short-term kind of thing, and that these metals are essential in all kinds of things that you may not be thinking about.
So what projects do we need to know about?
So the Waterberg project is this world-class asset. We discovered it and we've drilled it off. We've completed all the engineering. We know how much it costs to build it, and it's ready to go. So we just recently got granted our mining right, and it's located in the northern part of South Africa, as you're showing now. One of the most profitable mines in Africa and one of the most profitable mines in the world is the Mogalakwena mine, owned by our partner in the battery business, Anglo American. It's a massive open pit. It's producing hundreds of thousands of ounces a year. Our mine is scheduled to produce 420,000 ounces a year, as I mentioned, with a 45-year mine life.
So today's price action with metals aside, what's been driving the metal prices, with palladium, rhodium? Is there anything behind what's been driving them higher outside of today, obviously?
Sure. Well, they're really rare. First of all, they're about 80 times rarer than gold in the world. And for the palladium market, it's all about autocatalysis. So it's the tailpipe of your car. And 84% of palladium use in the world is in the tailpipe of internal combustion engine cars. Now, a lot of people thinking battery electric vehicles are coming on, demand for palladium is going to come down. But what we see all the way out to 2050, actually, is that hybrids are probably going to be the dominant technology, something like 40% of the world's market. So that hybrid market needs these elements in the tailpipes, even though part of the car is running on batteries. And that really has been missed, I think, in the market profile. People thought battery electric vehicles are going to come on more quickly than they have, and they missed the fact that palladium's used in these hybrid vehicles.
What other use cases are we talking about here aside from EVs and hybrids?
So in terms of palladium, it's really all about transportation, but we are now putting palladium and platinum in a lithium battery. And the thing about these metals is they're great catalysts. So they're used in things to catalyze a reaction, to make them go better. And what we've found with patented technology now that we own at Florida International University, we did this work originally, we found that they're doing their classic thing. They're actually acting as a great catalyst and helping a lithium ion and a lithium sulfur battery perform better. So this has been a huge new thing for us and very exciting in where the market in transportation is going.
Got it. And then why did the company decide to enter the battery market?
So I'll tell you the quick story was I literally was sitting at home one night and I said, gee, if battery electric vehicles come on, that's not going to put palladium in tailpipes of standard cars. But, batteries are not that great. And then all of a sudden I thought, well, why would palladium not do its classic thing, act as a catalyst and go to battery? I entered 3 words in Google, lithium, palladium, battery. And sure enough, a former MIT postdoctoral fellow, super researcher in batteries, was busy developing exactly that technology. That was 2 years ago. And I went down to Florida, cut the agreement, put the joint venture together with Anglo, and now we own all of that intellectual property on a very logical thing, actually, when you think about it from first principles.
Wait,
well,
can you clarify?
That's the power at Google there.
Wait, can you clarify that? So you own the IP. What does that get you exactly?
So it means we own the patents to put these metals into a lithium battery. And what we think is that they can play a very important role in transportation going forward by improving the performance of a lithium battery. And as everybody knows, EVs are great, but the battery performance is not quite where we want it to be. In terms of charge time, in terms of the length of time you can drive on a charge, the range, and so on. All of that's pretty tough. And so we think that these metals have a role to play in improving the battery performance, and that this is a really strategic investment for us.
I guess I'm just trying to understand, because what is to stop me from putting these metals in a battery, right? I mean,
so first of all, you have to know how to do it. You have to know how much.
Assuming I knew how to do it, which I don't. But
okay, so if you knew how to do it, if you did that, you would actually infringe on our patent. So we have a specific set of patents that are directly on putting these metals into a catalytic converter. Into a catalytic converter, but also putting them into a battery.
And nobody else is doing this?
There are some people in Asia looking at it, but they're doing it in a very different way. And our patent actually protects the way that it works.
Okay. So you've got the IP, and I assume ownership of what's coming out of the ground?
Yeah, so that's why we think about these metals differently. A lot of people actually say, well, gee, palladium's $2,000 an ounce, rhodium's $20,000 an ounce, platinum's $1,200 an ounce. That's pretty expensive to put into a battery. Is this really going to work? But the thing is, it's what they do, right? We look at it differently because we own 45 years of reserves of these metals, and that gives us a different way of thinking about what we do with them. And in fact, if we make these metals slightly more expensive, we actually like that because we own 19 million ounces of the stuff. So that's why we approach the innovation differently than everyone else. And Anglo American is one of the largest producers of the metal in the world. It's also our partner. So we just come at it differently. And all of a sudden we start to realize, wow, these metals can be really powerful in this application.
Got it. And then as far as like the actual metals goes, are you guys, so you mine them and then you are producing the batteries as well? Or are you outsourcing the metals to a company that's then going to put them in the batteries?
Yeah, so our principal focus is on mining the metal out of the ground itself. And we would actually sell that as a concentrate to a smelter that melts it and produces it into bars. So that middle part of the business is not really for us. But the back end of the business, where we apply the technology and get the metal used in the technology, that's where we're really interested. And we want to own that intellectual property. And we also want to encourage the market on these metals.
I have one more. When's the next update we can expect on the Waterberg project?
Yeah, so Waterberg, we're expecting to be on the ground and starting our process of getting ready for construction here in the weeks ahead. We'll have announcements about the progress on this project. It's a massive project, right? It's got a net present value of something like $2 billion in our independent feasibility study. And as I mentioned, a 45-year life with a 30% internal rate of return. So this massive project is going to have a series of updates in the weeks ahead. And we also have an update on what we're doing with Lion, which will come over the next quarter or so.
Got it. All right, Mike. Is there anything else you want to share with our audience of investors today, or?
Well, don't be scared by a short-term move in the metals. It's a great opportunity, and these things have been on a bit of a tear, right? I mean, palladium, rhodium, platinum have all been moving up steadily. So for investors, watch for these kind of dips. This is when your opportunity is here.
Got it. Understood. All right. Well, thank you. And that is Mike Jones, CEO of Platinum Group Metals. Thank you for joining the show today.
Thanks for having me on.
Of course.
BTFT.
And please, ticker PLG. Please keep in contact with us as you have developments. Anytime you have breaking news, reach out to us. We'd be glad to have you back on the show.
Look forward to it. Thanks, guys. Have a good day.
No problem. Enjoy the rest of your day, Mike.
Moral of the story is I got from this BTFD always. BTFD, doesn't matter the asset. That's what I took away. No, in all seriousness, it seems like a cool company. We look forward. They're very, very early on in that project, so we'll have to see how things shake out with that. Thanks for coming on, Mike. Aaron, do we have our main man here or not?
Yo, what up?
Luke.
I did it.
Wait, your volume is jacked up. Just turn yourself down a little bit. You're a little loud. If you can. Can you do that?
Okay. Yeah.
I can do it from here. Let me do it.
All right, boom. How's that, Spencer? Israel?
It's a little better.
A little better?
Yeah, we're good. We're good. All
right, good. Look at you got producer Rohan's all worked up now. I mean, what the hell?
Say hi to producer Rohan, everybody.
All right, so did you guys wish everybody a happy Thursday?
Yep.
Man.
One day removed from hump day. It is Thursday.
Yeah, I mean, if you don't wish people a happy Thursday, I mean, what's even the point of Thursday? That's what I would say. But all right, you guys, I heard the interview. I just couldn't be heard. It seems like a pretty interesting company.
That's better.
It's the EV play.
It's the
all right, what other stocks have you guys already talked about?
We talked about tech because it's ripping today. I don't know if you noticed.
You, Spencer, we're not talking about sectors. This is about YOLO stocks.
I know. I'm talking about every
I
tech
talked about
stock.
Nvidia, Luke.
There we go. Okay.
One of my all-time favorite stocks, up about 5% today. All-time highs of $750.
Yeah, that's honestly, nice. What the hell happened to Ford today? I mean, did you guys see that move?
Dude, they gave some good...
But look at the stock, Spencer. Israel down 2%. Let me throw it up here. There's a 2-day chart. So we got some news out of Ford. They're doing an investment presentation later this afternoon. They came out with some updates. The pre-order numbers here. Let me pop these.
Dude,
on the
sell
screen.
the news, man. Buy rumors, sell news.
Yeah. So here's our latest pre-order numbers from some of the newer Ford vehicles. They look decent. The company also said that EBIT, that's earnings before interest and tax, so basically it's like a net operating income type number, is going to be significantly higher than it was on a year-over-year basis. I don't think that's a huge surprise, right? If we're talking about Q2 20, that was in the middle of the COVID scare. I actually bought a vehicle then because everybody thought that the world was coming to an end. So I don't think that's as significant. I think it's more of these pre-order numbers, these reservations that the market was looking at. So I'm a little bit surprised that we're down. The run this morning was obviously fun, but I'm just going to look to see how we close later in the day.
I do have to hop off, but before I go, I want to say that I'm in the mood to buy something today. So do your best. Give me some ideas. I'm in the mood to buy.
I want to talk about Torchlight today, so maybe that'll be your one, Spencer. I don't know.
I'll be listening.
There's some Torchlight drama that's happening right now.
Give it to me, man. I'm ready.
You ready right now?
All right. Well, later.
All right. So our boy Hugh Henney, right, was going back and forth, trading some tweets with the Metamaterials CEO yesterday, and so we're just gonna need to get Hugh on here and get everything cleared up.
Yeah, maybe we'll do a whole Torchlight segment tomorrow where we can do RDD, compare it to Hugh's DD, get his take on what's going on with the Meta merger and all that.
I mean, Hugh expected that they were going to drop an offering, right? That was his expectation, his concern with the stock. They did, in fact, drop that offering. I mean, he called that spot on. So
they also announced a special dividend, correct?
Yeah, I don't know. We got to look. So somebody in the chat clarify for this. Is a special dividend just on the preferred shares, or is there a special dividend on common as well? I was just looking at the press releases before we hopped on here. I saw the press release for the special dividend on the preferred stock. Okay. No, I'm sorry. So the special dividend is for the common stock, and what you're getting is a dividend in the form of Series A preferred shares.
So that's interesting.
There's just a little bit of digging that needs to happen here.
Got it. Well, yeah, we'll dig into all that, and then tomorrow maybe we'll do a whole Torchlight 10-minute segment. Maybe we can get Hugh on. I do have one other stock I was watching today, if you don't mind pulling it up on the good old Benzinga Pro terminal.
Yep, you pull it up though.
I will do that. Give me 1 second.
Producer Rohan here. He's working on some audio levels.
What's up? I'm fixing it.
I think you sound fine to me, Luke. I don't know if people in the chat.
Yeah,
are
I think I sound
otherwise.
fine too. Does my audio sound fine, guys? I'm already 10 minutes late. Now we're doing this, and it's like, geez. Let's
Put
just
a one
roll,
in the
baby.
chat if his.
I want
to.
Drop some ideas.
What, Luke? Before I show you the stock I'm looking at, how do you feel about the solar space right now?
Solar? No opinion, really.
So you're abstaining.
I'm not a lover. I'm not a hater. What's your? I'll ask the thing that I say every time somebody pitches a sector, a stock, etc. What's your reason for owning it? So let me flip that question over to you.
All right. Well, let me get to the stock real quick. I'm trying to. Let me add my thing. It's a little. Let me see how it looks because it's a little wonky on my screen right now.
Boom. And we're about to have Blaze in the house in a second here.
Blaze in the house.
All right. There we go. All right. Give me the stock. I got my Benzinga Pro back. Hit me.
Ticker RUN. Sunrun. So I'll give you my thesis.
Sunrun's $52. Holy crap.
I'll give you what I like about it. First of all, from a technical standpoint, I like when a stock's been like beaten down like that. But then,
all right, so this chart, guys, goes back to 2015. I mean, this stock was a dog forever. Holy crap. Sunrun is 50.
But look, if you go back to its all-time highs, I believe it got all the way up to around like $80 or something earlier in the year when we had that big EV solar boom. But here's the thing, Luke. I don't know if you've heard, but people are building a lot of homes right now. And all across the country, people are looking at ways to make their new homes that they're building energy efficient, green powered. And Sunrun is the leader in the country for residential solar panels on new homes being built. So I'm expecting with this new boom of homes being built that for the next year, all their earnings to be good. They're going to beat earnings because people are putting more solar panels on their homes. We were just at Sandy Monroe's office a few weeks ago, and he was talking about the home he's building up here in Michigan. And he's like, that's a big myth that you need to be in Arizona to have solar panels on your house to make it worthwhile. He's doing it up here in Michigan. And yeah, I just like the fact that they are the industry leader, the premier company that's doing this. I would like to see them get more into, some commercial stuff. So say like a new Kroger's going up.
They're burning $200 million a quarter in cash.
That's fine. You got to spend money to make money, Luke.
There's $650 million of cash on the balance sheet.
So I do want to hear your quick breakdown
sales.
I do want to hear your quick breakdown of the financials. So I don't know if you have time to do that right now because we do got to bring Justin on, but maybe let's
bring Justin on. All right, guys, so stay tuned. We're going to do Sunrun. Other stocks that I want to take a look at today. I got Tesla on the list. I want to talk a little bit more about Torchlight. If you guys have tickers, drop them in the chat. Let's get this thing going. I finally got my audio working. But yeah, let's get Justin on here. The people have been waiting long enough. Justin, what is going on, man? How you doing?
Hey, Luke. How are you? I'm great, thank you.
Doing well. Pleasure to have you back, of course. Happy to have you here. What's going on?
Looks like I'm having an issue with my webcam. Just an FYI. Looks like my webcam's a little bit stuck. I've had this issue before with StreamYard, which is why I actually switched streaming services. So maybe it's going to work. Maybe it's not. But I'm happy to be here.
It's a good frame that it's stuck on. Well, I think we can all agree on that. If you guys think this freeze frame of Justin looks beautiful in the chat, drop me that one. If you're a hater, just go away, okay?
Don't worry. There's always going to be some hate out there. How are you guys doing today? Obviously, things have changed a little bit since I came back last time. And I was watching the show, I believe, on Wednesday, and you had a young trader on. I forget what his name is, but what was his name again? That young trader, the one from London, the 13-year-old.
That's our boy, Young Investor. Young Investor. In the let me drop his. I'll drop his Twitter in the chat. You guys got to check him out. He's awesome. What did you think?
I really like that because I've got somebody who is doing something very similar. I think he's even in the chat here. His name is Drew. And I did an interview with him, and we released that on our channel about 2 weeks ago. And he's 14 out of New Jersey. So he's been doing something very similar to the other young trader. And we've actually started an initiative where we're trying to support these young traders. I believe we've got about 15 people who are under the age of 18. And I really think that if we can teach somebody who's in their teens how to trade stocks and make money, and that they're willing to put in the effort, like meaning they're going to paper trade, they're going to trade smaller dollar amounts and then move into a bigger account. I don't think anyone can really have an excuse to do that. Yeah, Drew's here with us today, so I can see him there.
There we go.
Hey, Drew.
What's up, Drew? Yeah, I'm so all about that. I don't know when you got started, but I blew up my first account, I think, when I was 15 years old. Ran my summer long care money down to zero. The plan was I was going to take my $700, get it to 20 grand by the time I turned 16, so about a year, and then I was going to buy a new Dodge Charger. That was the move. The 700 quickly went the opposite direction. So I definitely learned some lessons in those early investing trading years.
I did the same thing. So I think what's also something that's really nice to hear you say that is that I think a lot of people only talk about their successes in the market. And I think that we learn more from our failures than we do from our wins. So like I blew accounts up too. When I first started trading when I was about 18, I went to zero twice. And am I proud of that? Of course not. But what I think I can do
It took me 3 tries.
It only took me 3 months, right? 3 months times 2. So save my money up, blow it in 3 months, right? Save up for another 2 years, blow it in 3 months again. And what I think we can do from that, and the reason why I like my having my channel a lot is because I'm trying to help people learn from my mistakes so that they don't make the same mistakes themselves. It sounds very simple, but when we look at, I went back and watched the interview that I did with you last time. I believe it was about 3 months ago. And ironically, I'd called for SPY.
SPY is getting hammered right now, guys. Just as a quick
SPY is getting hammered.
Trading. But keep going, Justin.
I'm watching some key levels here of so key levels that I'm watching include 419.8, 420. Below that we got 419.2, and then 418.2, 417.3 is going to be our key area. If we look at the weekly chart, 417.3 is the line in the sand now that we've lost 423. So, but anyways, I was calling for 420 when it came on last time, and I'm aware the webcam is stuck. StreamYard is ever since they had an upgrade to the latest version of Mac, the webcam for StreamYard just doesn't seem to work, and I'm not really quite sure why. It's been stuck and frozen, so I had to switch to a different software. But anyways, I went back and had a look at the comments, and someone said like, "Oh, we get one gap up, and you're calling for 400. Like, you guys don't know anything." And what I'm seeing again, like on YouTube on my channel, is that people are still trying to give us those excuses to be bearish. There's always going to be a reason to say that the market is not healthy, that we can't go higher. But at the end of the day, what the Federal Reserve said yesterday is that easy monetary policy is going to be around for the next 2 years minimum.
Yes.
And
the Federal Reserve has signaled for years now the market cannot go down. That's like their actions have shown to us the job of the Federal Reserve is to keep the market hitting all-time highs every year.
So I was making a joke yesterday that like when Jerome Powell was giving his testimony, like what he should have been saying is like, "Sir, I'm just a printer technician. Like I don't know what's going on in the market, but all I do is I just operate the printer, right? I just put toner in, I hit buy, and that's my job. So if you guys are surprised that I'm still printing, like you should be aware that I'm just a printer technician. That's all I do.
Yeah.
I just I service the printer, and it seems silly, but like that's really what they're doing right now. And what they called for yesterday was, again, like that was the taper tantrum, apparently. The reason why S&P is moving lower today is because of the dollar, DXY. DXY is on an absolute tear. So if we compare DXY to SPY, we almost see that.
Do you have a screen you can share with us? If not, that's
sure. Yeah, let me do this here. Share my screen. Share. Let me hide that so we don't see everything. And I just have to hide one more thing here really fast.
I'm like, yes, the king of the hider. My favorite is like I'll specifically like take my screen off because I need to like go hide an account value or something. And then one of the producers in the background shares it because I think I did it on accident. It's like, no.
I hit that on purpose.
Yeah, exactly.
So if you can see my screen now, I should be able to add it on here. I think I have my screen shared. I just can't share it because I'm not. There we go. So if we have a look here, here's what I'm noticing. Yields are down today, and we're seeing rotation back. So what we're seeing is that, again, banks are very red and tech is green. The reason why this matters for me is because the saying is that chips lead tech, tech leads SPY. So if we have a look here at the semiconductor complex, well, today we heard news about AMD being a supplier for something new. We have a look at what's been moving the S&P to all-time highs year to date, and it's pretty obvious, right? It's everything but tech. Everything except for Apple, Amazon, Tesla has pretty much been bright green year to date. So if we're going to be going to a new all-time high, or if we're going to start going sideways, what I would expect to see is that the pockets that are the brightest green are going to start to turn a little bit less green. And the pockets that are red are going to flip back to green. Apple is the best company in the world. I'm sorry if that hurts people's feelings. They are. The other best companies in the world include Amazon, Microsoft, and a few others like Google. So Apple being red year to date is not a surprise, because if they're trying to hold back SPY, and as of right now, SPY is up like on the year, it's had an incredible run. If you're only looking at short time frames, you're like, oh my God, we're going to zero. No, we're not. Like, look at the candle. How can you tell me that is bearish? I don't understand.
What are these monthly candles?
These are monthly, yeah. So sorry, this is a yearly chart. So this is a yearly chart.
Oh, okay.
And if we look here again, like, oh my God, we got a tiny little wick at the top. Like, Luke, is that bearish?
It looks, the trend is your friend, baby. Looks pretty damn friendly to me.
If we zoom into a shorter time frame, yes, we are moving lower today. That's okay. Stocks go up, stocks go down, stocks go all around. And if you understand that you're playing a game, the game is to make money. So what I'm finding as well is that people always want to find an excuse not to buy or a reason to sell. And they try to remind us every day. So again, let's step back for a moment. And I went through this on the stream yesterday because what Jerome Powell said is that this is us thinking about raising rates. And what he said is that 2023 is when we have liftoff. However, even when we have liftoff, we're going to remain highly accommodative. Not a little bit of accommodation, highly accommodative. So from now through 2023, we can assume that we're going to drift higher. Why? We're in a liquidity-driven rally. And if we're going to get even more liquidity, and ironically today we got a fresh headline that there's even more coming. So let me pull this up here really fast. The original bill being discussed for the infrastructure was $2 trillion. Well, now we've got 6. So I think 6 is bigger than 2. I could be wrong. Again, I'm not a mathematician, but when I look at
money flowing, baby.
6 is a little bit bigger than 2. And if we're in a liquidity-driven rally and we're going to get even more liquidity, would it not be reasonable to assume that we're going to keep going higher when the Federal Reserve is not tapering? They said that we expect inflation to overshoot, and 3.5 is okay. So they've pretty much given us the playbook for the next 2 years.
Yes.
And
I'll add this one too. In my home state, our home state of Michigan here, where Benzinga HQ is, they just came out earlier this week because they're having a hard time getting people to go back to work. You'll actually be able to collect on unemployment and work at the same time. Right? So how much money is that dumping into the local economy?
And like that's the crazy thing. Like even this morning, we were hearing that like people have not even fully spent their checks yet, and there's even more going out. And as smart as I think I am, yeah, this guy's smarter. I've recommended a book last time when I was on here called Market Wizards, and Paul Tudor Jones is one of the original market wizards. What this guy's saying is very obvious here. So again, this is for investing. It's not for trading. So if you're trading, again, maybe you want to discount what I'm going to say here for a little bit. Before I forget too, though, come on, would you guys mind smashing that like?
Let's go, baby. Let's go. Yeah, that's what I'm talking about. Smash the like, share the stream, and drop us the tickers that you're looking at, guys. Come on, the chat is quiet, the chat is boring. And Justin, let me say this too, for folks who are concerned, right? Like it hurts to have these red days, right? I'm down a few grand today. It's not like a good day. I'd rather have that look the opposite. The thing that I do in this choppiness in here, let me add my screen back in here. This is an exercise that I did in this is early May, right? When we got this last little round of choppiness in SPY, is I go through all the stocks that I own, all the positions that I have, and I've got a combination of long-term holding and swing trades. And I just ask myself one by one, what is my reason for having this position? right? If I still have a thesis for this position, it makes me feel a lot better and it helps me to stomach through any sort of choppiness that I get. If I can say, no, I don't have a reason to own this. My thesis played out or my thesis was wrong. Like, okay, let's close up these positions and not be lazy about it. So if you are having a hard time mentally on some days like today, that's an exercise that I've found has helped me significantly over the past few years.
I really like that too. And like a different way that I like to spin that is like, so pretend you did not own the stocks through some stroke of magic. Now make believe you got all cash back. Would you buy the stock again? If the answer is no, you're being pig-headed and you're being stubborn, because if you don't like the stock but you're holding it, like that's a problem.
Great. Yes. Exact same way that I think about it. I love it. Yes. You always need to retest your thesis. You bought it for a reason. Is your thesis still in play or not? Always be asking yourself that question.
And I've made some pretty funny analogies lately. That's, again, like at a certain point when someone tells you that this banana is beautiful, it's yellow, and when you open it up, it's black inside. Do you still eat it anyway, even though the outside was yellow? You're like, I like yellow bananas, but this thing's completely black. And you can tell me it's yellow. You can tell me that it's 50% off. But if I'm like, you know what, I don't want to eat that. I don't want it in my portfolio. It's the same thing like the stocks here. So if you wouldn't mind resharing my screen, I'll just finish off my thought here, and then maybe we could talk a little bit more after. So like going back to here again, as smart as I think that I am.
Any individual names that you're looking at too, let's definitely make sure you have time for those.
I'll circle back on the ones we did last time too. And so just to finish off on here again, this is a theme of what I'm looking for. So Paul Tudor Jones is a smart guy. He is smarter than me. So as smart as I think I am, I'm going to defer to him. What he told us on Monday was that he says go all in. He's not saying dip your toes in. He's saying go all in on the inflation trades if the Fed keeps ignoring higher prices. What we heard yesterday from the Fed is that it's business as usual. They're not going to change anything else. And what I think we're seeing today, if we scroll down to the bottom part of this article, it's talking about how, come on, if I go down to the bottom here. So again, Paul Tudor Jones, smart guy. We got to go down to the bottom here. What he tells us is that the only thing I know for certain, I want 5% gold, 5% Bitcoin, 5% cash, 5% commodities at this point in time. I don't know what I want to do with the other 80%. So if Paul Tudor Jones is also doing this, what I have a strong suspicion of is that, again, I don't know what I want to do until I hear what the Fed's going to do. Well, yesterday we heard what the Fed's going to do. There's going to be big money like this guy who are going to be repositioning for the next leg higher. That's what I believe. Can we take a move down? Absolutely. But we have to keep in mind that we're climbing a wall of worry. So if we understand what we're doing, there's always something to be worried about. When I was on last time, we were worried about 420, right? Oh my God, 420 seems so unrealistic. It's so high. Well, we're at 420 now. So we're 5% even higher than that. So if we were overvalued before, are we more overvalued now? Or is there fundamentally something we don't understand about the mechanics of the market? Yes, we're overvalued. Michael Burry's calling this the greatest bubble of all time. And I think that if you're trying to find a reason not to buy, you're going to find one. You can find it today. You could have found it yesterday. You can find it every day. But when I was on last time, again, I said SPY 400. That was a pretty strong statement at the time. Here we are. We're at 420. Yep. So other thing I mentioned last time, and sorry, go ahead.
I was just going to say, I want to throw this one out to the chat. All you out there in ZingerNation, if you're watching us, you are a member of ZingerNation. First question of the day. 1 month from now, if you think SPY is higher, drop us the 1. If you think SPY is lower, drop us the 2. I want to see where everybody is at with this thing. You're not, this is no Switzerland in World War II. You can't sit on the sidelines. This is an active chat, okay? 1 if you think we're higher a month from now. 2 if you think we're lower a month from now. Call it. But all right, Justin, keep going.
I think 1. So same thing as SPY like from last time. What I did is, again, here's the stocks we talked about last time. We talked about Asana. Well, it's all-time highs. So again,
it's having a great move today too.
CEO bought shares.
Yeah,
it's crazy. Stock is on fire.
Yeah,
so
it's
again,
moving today, 8%, 7%, guys.
Would you rather be right? Would you rather make money? And like this stock is willing to pay you, right? 7%. You like AMC? Hey, check out this stock. It's sexy. Look at the thing go, right? It can't not stop.
And so Benzinga's a customer. We're a customer.
Yeah, and we went over that last time too. The other one that we talked about was we talked about Upwork. So again, I still like.
So let me ask you this: for Asana, you still like it, or were you?
I like it, but I don't own it. That's the trouble here. Is that I was waiting for the June dip to happen, and the stock just never gave me the pullback. I'm looking for a re-entry now around 43.65, which is the previous all-time high, if it comes back down. So
Yeah.
If we're able to dip back down to here, that's where I would get interested in here. And I think like the easiest way to try to explain the watch list of stocks that I like is that I'm looking out into the real world and I'm trying to ask myself, what are things that people need that they might not realize, or what are trends which can continue going through? And I'll mention this one now. So what I talked about last time again was Cameco, CCJ. We talked about this one here. It's doubled. Obviously, it's having a big pullback now. I exited more in my position at 20.5 yesterday, but this came to a climax when we heard about Putin and Biden yesterday. We talked about again nuclear potential escalation. That's why the stock went from 10 to 20, and this trade worked out beautifully too. Hit a fresh 52-week high. So this one worked out. The last one worked out. And if you wanted a reason to sell, or if you wanted a reason not to buy, well, here we are higher. So those two worked out beautifully. Another one that I'm really proud of that I got in recently here is Net. And Net, again, a new all-time high. So everyone's like, oh my God, the market's bearish. It's going to go to zero. Well, some stocks literally do.
Oh, and we just hit that today too. Another 5% today. Hit that
this stock is bullish AF. This stock can't quit. And when I look at this one here, the reason why I really like this one here as a top pick is because if you look back over here, Cloudflare 1. So the cybersecurity attacks that happened recently, and what we heard from Vladimir Putin yesterday is that he's basically denying any kind of wrongdoing for the hacks. This is a cybersecurity company, happens to be the best one. So the reason why this really matters as well is because I bought into this one here with our group somewhere around here. So between like 65 and 70 is when we initiated the position. We got an artificial dip because one of their main competitors, Fastly, had a really bad earnings report, right? It came all the way down with a huge gap down, dropped down like another 30%.
And then they had that outage not long after that too.
Yeah, but like the outage was actually bullish though. The reason why the outage was bullish is because people realized that if 10% of the internet goes down from this one company that's worth 6.5 billion, maybe it's not accurately priced, right? When Amazon goes down, they take down half the internet. They're worth trillions. Yep. So this company here is really small. So my point here was just that I was looking at getting into Net at around, I was looking at getting in before earnings. I thought I was going to get it at like 80s. I thought 75 was a great dip. It came all the way down to 65. So if you like discounts, the deeper the discount, you should like it more. And if you have a mindset of like what Luke said earlier, if you're buying this company for a trade or for an investment, just make sure you understand what chart you're looking at. A daily chart should be used for an investment. You shouldn't be looking at this one here and then deciding that, oh, I'm gonna top ticket whatever. So I think this one here has very good potential to keep going higher because I don't know if we went over this last time, but there's a bell curve of adoption. So the bell curve of adoption basically just means when a product can become very popular. And if we look here, Cloudflare now has 17% of the Fortune 1000 companies as clients. So the reason why I'm focusing on this stock is because I think the stock is going to be evergreen, which means that I think it's going to be higher next month than it is now. I think it's going to be even higher after. And the stock is now graduated to, Mason called it going to college. It's now a triple-digit stock. It's a big boy. It's a big stock now. If we have a look here just at the image, we get percentages. So we look here, open image in new tab. I don't know why this thing's going so slow. But if we zoom in here, so if now Fastly has 17% of the Fortune 1000 companies, they're basically in the early majority here because 13.5 plus 2.5 gives us 16, which means they're 1% into the easiest part of making money. They're just starting here. And now there's a national and worldwide spotlight on the company and on the sector. Why? There's cybersecurity attacks. Companies are paying tens of millions of dollars. And it's also a national security concern. So if you're looking at the stock today and you're wondering why the market's down and this stock is pumping to new all-time highs and breaching 100, it's because it is fundamentally very strong. We got an artificial dip here. Sorry, go ahead.
I was gonna say, so Justin, let me ask you this. So when you're talking about like long-term positions like this, are you thinking in the time frame of, you want to own Net for months? Do you want to own Net for years? I mean, what exactly does that mean to you? Or let me ask you this: what future catalyst, data points, etc., do you need to see to help you make those decisions into the future?
What I've tried to do over the last little bit is actually shift the way that I'm investing. And the reason why I'm doing that is because I find that if I'm making shorter trades, it's very hard for people who work a full-time job to be able to actually see the updates, meaning that You bought it at 9:05, 9:35, then you sold it at 10 o'clock. Well, I bought it when you did, and I never got the alert that you sold.
Yep.
So what I'm trying to do is give people ideas where they act once, and then they literally don't do anything. Let your winners run. It sounds so simple, but it's hard to put into practice. And people have to get comfortable with making money. Making money can be uncomfortable for a lot of people. So for this one here, minimum 3 to 12 months. Any stock that I initiate as an investment, minimum 3 to 12 months. And with this one here, I initiated my position with about 400 shares. I left myself wiggle room that, again, if their earnings also were disappointment, that if we drop down to 50, I could add up to 4 times more. So I was willing to add up to 4 times more. So if the stock goes up, it means that, oh my God, I'm making money on, I don't have enough shares, but I'm making money. If it goes lower, I'm like, this is fantastic because I want to buy up to 4 times more. I can buy.
Do you ever sell puts on long-term positions or places where you want to do that? That's like my favorite trick.
So here's what I did. Because this was a new stock that was initiated, exactly, I was going to mention that. So what I did is I sold some covered calls when I first got into it. So I sold some covered calls and I sold some naked puts. The reason why I sold the covered calls is because
all day. Love it, love it, love it.
And I just did that on BA. So I initiated a position on BA yesterday. I deployed more than 6 figures in the last 24 hours. So for me, I'm speaking with my dollars. My dollars are saying that I'm bullish. I'm bullish for the next while. Is it going to be a straight line up? No, nothing goes straight up. So the takeaway here is that you can use strategies to minimize the risk, but if I said I want to buy up to, again, X number of shares, and yesterday I love the stock, and then it gives me a bigger discount, and I say I don't like it anymore, I'm either not able to check my emotions, or I don't really understand what I'm doing.
Yep.
And those are not good answers, because if I love the stock yesterday, and then it gives me a bigger discount today, and I say I don't like it anymore, that's a massive problem. What do you think about that, Luke? And like, how have you found this, like with like you and your audience here, like on YouTube? Because I found it challenging, to be honest.
Well, how so? Why do you say that?
People are scared of making money.
Yeah.
So like the stock is too bullish. They want to find a reason not to be bullish. They're like, oh, well, the stock's too bullish. The stock is too bullish.
No, see, but that's interesting. Because I get the opposite of you, actually. I get the, like something will gap 70% on news, and then everybody's like, okay, now's the time to go. Like it's an FDA announcement. You don't even understand what the news is. Like take a second, digest it.
I have 2 normal viewers. The one normal viewer is the person who's coming in for what's hot. They want to buy what's already up 100%. Right? If it's not up triple digits, I don't like it. If it's not already up 100, I don't even want it on my watch list. Yeah. Those are the people who are trading what's hot. They're not experienced. Okay. However, the people who are more experienced in following me for the last couple of years.
Okay, those are the ones that. Okay, that's fair.
There's a stark contrast between the 2 groups because
when we get what about the bag holders? We got a lot of bag holders in ZingerNation, guys. Sorry, I'm calling you out. A lot of you still own your Nikolas that you bought at the high. You top ticked that thing. You're still in it. Okay, we all know who you are. It's okay.
But here's my advice for bag holders. And I think that so someone who I had on recently was Mary. I'm not sure she's here again today, but when I had Mary on, so I called Mary out in 2019 because she was an Aurora shareholder. I warned her to sell her Aurora in November of 2019. So I warned her to sell right here. The stock was already down by 90. I gave out multiple warnings and I said that I think we're going to go even lower. The stock's already down by 70. People think there's no way I should sell this thing because it's already down 70, only got 30 cents left. And then what did it do? Well, it dropped by an extra 90. So the difference here is that, again, if you would, and this is what Mary did basically. I called her out and I said, why are you holding on to this thing? And here you go. There's Mary right there, my worst nightmare. But since then, she's in the last couple of years, she's really skilled up. So if she would have just held on to this one thing, she would have lost 5 times more. And what she did instead is she bought Truly, which is what I suggested. Go buy American LP, MSOs. And in that same time, from November of 2019 to now, we can see here that even just from right now, Truly is up 250%. You could have undone all the damage from your trade in ACB if you would have been willing to admit you were wrong and rotate into something that was working. That's the first thing here. Understanding the lesson. The reason why I blew my accounts up is because I rode my losers for way too long and I cut my winners fast. It was a skill that I had to learn. Let your winners run. Cut your losers fast. It's not easy. You have to admit you're wrong. Admitting you're wrong is quite difficult for the average person. So if you're struggling with any of your stocks, what you need to try to do is figure out, again, pretend your entire portfolio was liquidated for cash and you got 5 stocks. Would you buy back those 5 stocks in that same proportion, or would you balance a different way? If the answer is I would balance.
Yeah, keep going.
What I would say is, like, if you were to balance a different way, your allocation is not appropriate for your current risk tolerance in the market. And all that means is that you made a mistake. How bad it gets is now up to you. And before I forget, and then I'll jump in here. Like, Mary has been someone who has been really stepping up here. She made 6 figures on AMC in 2 weeks.
There we go, Mary. Hail Mary in the chat. Yes.
Exactly.
And Justin, we are going to have to leave it there, unfortunately. Okay. But can you tell us how folks can stay in touch? I just dropped the socials in the chat, guys, so check those out. But Justin, how else can folks stay in touch?
Yeah, I have a YouTube channel, so I'm streaming every day. Every weekday, I'm streaming here on YouTube. I'm going to be actually on in about 10 minutes here on my normal channel, so I'll be here. That's probably where you can find me and where I'm most active. That's me right there. And then on Twitter, I don't really tweet as much, but you can find me on there. It's just @Blaze Capital. And otherwise, one thing I'll just say before I sign off here is that if there are any other young traders who are under the age of 18, we have an initiative where we're trying to encourage them to actually trade and do well. So if anybody's interested, you can email us at info@blazecapital.com. And with that, we would be willing to help you out for free, meaning that if you're under the age of 18 and you just don't have the financial means to trade stocks, we're more than willing to help you.
I think you sound pretty clear.
Boom.
Shout out Brooks in the chat saying Blaze Capital if you like tendies.
I bet you would.
There it is. So Justin, good having you as always, man. Reach out, guys. Get active. Stay involved. Good advice. Rerun this segment. Play it again, okay? When you go to bed tonight, play it again. There's some good advice in here, Justin. Appreciate you coming on, hanging out with us as always.
Thank you for having me. And like I said, congratulations on your 100,000 subscribers. When I heard from James saying that you guys cracked that, that's a big milestone. So I want to say congratulations to you guys. And I think that it's been really fun watching your show evolve over time too. And I'll just say this: I've been copying some of the stuff you guys do. So like the 1 and 2, I copy that. That's a really, really good way to engage with the audience. And I think that people can learn from this channel, whether it's how to run a stream, how to learn how to trade stocks, how to have fun. And I look forward to coming again. So thank you.
There we go. Awesome, Justin. Appreciate it. We'll have you back shortly, guys. Make sure you go check out Justin. Check out Blaze Capital.
I'm going to send you over.
Yeah. Happy trading.
Everyone left.
All right,
Justin's
producer
a great.
AB, how was that? That was some fire.
Justin's a great guest. I love having Justin on.
Exactly. And all right, guys. So 1, subscribe to the stream, like the stream, all that. 2, I have to go to a Benzinga board meeting, so I'm not at my normal seat. So I got to go zoom into that now. But we're not done. We are far from it. The block is hot. The stocks are hot. Producer AB is about to kick it off with Frank Curzio. Frank is one who is not afraid to drop stock ideas. Right? He last time he was on, I think he gave us 4 in like 15 minutes. Boom, 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 boom. The fundamental thesis behind them all. So let's bring Frank onto the stream here with us, producer AB. Frank, what's going on, man?
Wait,
hey, how's it going? Thanks for having me.
Before we do that, I just want to make the announcements that this episode is brought to you by Wall Street Unplugged, Frank's podcast. We have a little video we're gonna. Frank, how we doing?
Pretty cool. What's going on?
Yeah, we gotta lengthen it a little bit for next week, but I just wanted to let the audience know that this is a special episode. It's brought to you by yourself truly, Frank.
Yes, exactly, by me. Wall Street Unplugged. Thanks, I appreciate that.
No problem. So real quick, just for anyone who might have not been here for the last time you were on, do you want to just tell the audience real quick what Wall Street Unplugged is, about your podcast?
Sure, I appreciate that. So Wall Street Unplugged, I've been doing a podcast, believe it or not, for 14 years, pretty much before. Now everybody has a podcast, right? Before anybody else was really doing it. And we interview some of, billionaires, top guests. We do it on a weekly basis, never missed an episode in 14 years, which is pretty cool. So be consistent for you guys who start podcasts. That's very, very big if you want to be around for a long time and just Yeah, the amount of people listening and tuning in now is over 100,000 downloads, 125,000 downloads, which is awesome. So something we're proud of. We do it every week. It's on Wednesday, Wall Street Unplugged. You can find out more at wsupodcast.com.
What do you think about that?
Yeah, and I know in one episode we had our CEO Jason Raznick on there.
Mm-hmm. Yeah, he's cool.
Yeah, so that's impressive that you've been doing a podcast for that long. Definitely before it was the cool thing to do. And also impressive that you have that streak that you never miss. So you got to keep that going for sure.
I know. Hopefully I can keep it going. Getting older. It's getting harder.
So Frank, let's hop it. This is the Trade Idea Show. Let's hop into some trade ideas. What have you been watching? What have you been looking at?
Before I get it, I'm going to we share ideas, right? I mean, that's why people watch this. But I just want you to be careful because what I heard out of the Fed yesterday was a disaster. It's the reason why the market's coming down. It's the reason why there's confusion because we're going to see more inflation. We're seeing inflation. You get the inflationary things like banks and gold and Bitcoin are selling off. Everyone's very, very confused because all of us see inflation. Every bill we pay, stocks all-time highs, home price all-time highs, and the Fed's saying, hey, we're not going to do anything because we think it's short-term. We think it's transitory. They're not going to tell you how long short-term is. The reason why you need to pay attention to this, and I'm not a fear mongerer. I've been long. I'm still long, but I am getting worried because this is a problem the Fed can't afford to be wrong on, okay? They could afford to be wrong on the credit crisis, and they were really, really late. And what did they do? They took $500 billion, threw it into the banks, backstopped everything. Everything is fine. When you have inflation, this hasn't happened for 30 years, so people aren't familiar with this. When you have inflation, there's no easy solution. So if they're wrong on this, interest rates have to go up. I know people looking at 10-year coming down, thinking it's not going to happen. But you're looking at a market where a ton of leverage could come out of it because the Fed has to remove money out of the system. It's almost that they have to force a recession. So if you own stocks like ESG, stocks that have been the model of the past 5-7 years where they don't care about earnings, you're just adding subscribers, companies that have a lot of debt, there's a lot of risky names out there. These things could fall 30-40% in a month if the Fed decides to raise interest rates sooner rather than later, which could happen by the end of this year. So just be careful, guys, because if we continue to see these indicators going crazy, inflation 25-year high, just be careful because I'm an aggressive guy. I've studied small caps for over 25 years. I've been doing this. I have a lot of investments, but right now I'm a little bit worried for a guy that's usually not worried.
I'm boring, man.
Got it. Yeah, and I mean it's definitely something to watch out for right now. You know, I know all eyes were on the Fed meeting yesterday. Mm-hmm. So with that being said, do you have anything you're looking at right now, or are you just going to kind of wait, play it cool for a little bit?
No. I got things I'm looking at that I think you could buy. Again, if I believe this is going to happen, or we're going to see interest rates go a lot higher here, I'll cut a lot of the stocks I'm going to give you. But I always like to give you ideas that no one's really talking about. And one is GoPro, symbol GPRO. I hated this stock, hated it for a very, very long time because I went to the Consumer Electronics Show. I go every single year. I do broadcasts there, live YouTube stuff, doing it for 10 years. And GoPro they have a lot of China companies there. And with all the China companies, there's so many that have similar products that are half the price than their cameras. Also, they have one of the biggest booths on the same floor as Intel, where these guys pay millions of dollars. So I hate it for a long time, but I changed my mind because I saw David Einhorn, and this is a 13F guy. You should pay attention to 13Fs. That's where all fund managers that manage over $100 million have to report their holdings every quarter. Doesn't mean they still hold them, but sometimes it can lead to ideas. I'm not telling you to buy them just because someone buys them, but David Einhorn took a position, and I respect David Einhorn, 1 million shares in this company. I'm like, what does he see? This company has been so terrible, I didn't get it. And then I started digging into the company, and man, I think there's a tremendous opportunity here. It's a company that just changed its business model, and last quarter they blew out earnings. So instead of selling their GoPro 9 through Walmart, Target, whatever, Best Buy, they're selling it direct to consumer now. So they're able to lower the price because they don't have to pay their partners money. And also it comes with a subscription where they have 47 million people that are following. They're on throughout their social media channels. Now, by going to their app, and it's cloud-based now, so everything, you know how it is. When you're Apple, you're on the cloud. It's almost impossible to get off because everything's on one system, right? Whether it's, Google or whatever. They already signed up 1 million people, and only through them, if you purchased their products and their new cameras through them, you could get into, I think it's $9.99 to be on this service and have all the videos you have on cloud and everything. They already signed up 1 million people. So that business model is a massive, massive change. I mean, you see it all the time. You see it even early on with Netflix. I mean, they used to give you DVDs through the mail. You see it with cloud companies where would Microsoft and Amazon be where they are today if they didn't get into cloud? Absolutely not. This is a fundamental shift. These guys have figured it out. Margins are exploding. You saw massive growth, 220% growth. Nobody's talking about it. Wall Street still hates it like I hated it. But again, when the facts change, you want to be able to change. It's not that easy to do. It's something that I hated for a long time, but just take a look at it. Don't be one of those people. And again, I'm telling you things that I've learned during my 25-year career and mistakes I made. You hate something and you hate it forever, but you really hate it on everything that happened in the past. You want to buy stock based on what's going to happen in the future. And this company did the right thing. They changed everything they needed to change. That business model is great. And I really like GoPro here, which, yeah, I still can't believe I'm saying that, but we're up a little bit on that position already, but I think it's going to go a lot higher.
Yeah, I mean, it's always interesting to like get into a company like that that's been getting beaten down. But if you like what they're kind of doing to pivot, restructure, I'm going to pull up the chart real quick. And I apologize. I just moved away from the spot I was in because we were picking up some background noise.
No worries. But look at that. You'll see the momentum over the past couple of months. I mean, it's under the radar. You're going to start hearing about it. It's a name that, once it gets mentioned on CNBC, Fox Business, or whatever, or some of these, outlets in trading rooms and stuff like that, then it's going to be a lot higher for now. But nobody's really talking about it. And it does have a nice move. You look at technicals, it's definitely moving higher here. And again, it's pulled back along with the rest of the market past couple of days. But I think that's a real buying opportunity because, these guys got it right. 13 times forward earnings, growing tremendously. And again, Wall Street still hates it. When I say Wall Street still hates it, most of the analysts, they don't have buy ratings on it. Most of the analysts that cover it. So still a lot of room for upside.
Yeah, I'm looking all the way back here in like 2014, and it was trading really high. Like, and it went all the way up to, it kind of reminds me like back in that same time in the 2014, 2015 range, we saw like Fitbit went on a huge run, and then Fitbit just got absolutely crushed. And it kind of reminds me of that. But Fitbit is one that kind of had no coming back because once their technology got picked up by Apple Watches and all this other stuff, they just had too many competitors that were doing what they were doing, but in a better way. But GoPro's a little different because, we don't have those experienced, producers like Apple and whatnot making these portable cameras. So yeah, I'm going to have to like do some more digging into this, looking at, as you said, the technicals look great from April of 2020 to now. It's up from around $3 up to 12. So that's 4x, 4 times. That's some good returns.
No, very, very good. It's the sticky point, right? Is that now they're adding subscribers to this service, a cloud-based service. You're getting more and more people to sign up to this. Now they're generating recurring revenue. It's easy to model out. This is things that the company never had before. They were just selling cameras. They were all over the place, trying to sell subscriptions. It didn't work. This works. This model actually works. And the proof is, just look at last quarter. They finally broke out. So, I think that there's really good times for GoPro ahead.
Got it. All right, Frank. Well, we do got to wrap up here. We got to get wrapped up by 1, but we will see you back next Thursday. And again, thank you for sponsoring this episode. This episode is brought to you by Wall Street Unplugged, Frank Curzio's podcast. So please go check that out. I've got the link in the description. Frank, anything else you want to add before you leave?
Nah, that's it. Just if you want to listen to the podcast, we had a great guest, Harris Kupperman, Cuppy, amazing guest. So WSUpodcast.com if you want to find out more information. And thanks, guys. I appreciate it.
Awesome, Frank. All right, well, we'll be back next Thursday with you.
Absolutely. I'll be here.
All right. Have a good one.
Thanks, man. Okay, you too.